Let's see what we got here. Are we live? And we are live. We're ready to roll. So,
Boom.
what's going on, Dima?
Let's go. We are back. The duo is back, guys.
We are
You've
back.
all been expecting us. I know.
We're only going to do this with me and you from now on. I think Mike's permanently kicked out. No, I think he's staying in Ireland. That's what he told us.
Yeah? Oh, man. I don't blame him, dude. But maybe we'll give him another chance. We'll see based on feedback how things go. But yeah, tell us, Q, what happened. Where'd you guys go?
Yeah, so we went to England for a little while. We were there for about 2 or 3 days, and then we hit Ireland. So we went to Dublin and Galway. We hit a bunch of pubs, had a great time. Nothing crypto actually happened, so we kind of had a week and a half break of no crypto or blockchain news or situations where you were really talking it. So a little bit refreshing there, but yeah, we were in Ireland just doing the thing, man, doing the thing. I missed you a lot.
Miss you too, bro. But I saw you tweet it out, or maybe it was under our Twitter handle where you asked what's the crypto community in Ireland, and you were trying to, I guess, maybe see who is available out there. Did you talk to anybody about Bitcoin there at all? Did you did Mike pitch IOST rewards to anybody?
No IOST rewards were picked, thank God. I kind of left the country because I didn't want to have to deal with that. But no, so it didn't follow us there. We didn't really, again, we didn't talk too much crypto. Kind of missed it, but obviously it's nice to take a break. So I know they hit the countryside when we left. Me and my buddy left a little bit early. Mike and Andrea and a bunch of our colleagues and friends are still over there, so I think Mike gets back tomorrow, right?
Yeah, tomorrow.
So I did miss Layer1Live obviously this week. That kind of sucks. There was a lot of news over the past week that we could have easily gotten to, but obviously it's nice to take a break.
Yeah, no, that's cool, man. Feeling refreshed and ready to roll. We got packed episode as always.
Yeah, Dimitri's desk was pretty fire. You're stepping up the game with that green screen, brother.
Yeah, man. Did some upgrades. Hopefully people like it. I'm going to continue to improve that. I'm going to start expanding actually and talk about more different coins as like we're picking up in volatility overall. It's great to see some of these things pop, and it's like a lot of people are going to be interested in see how that price action is going to carry over. So,
are you going to drop any of the coins on today's Layer1Live? What's going on? What coins are you covering now?
Well, so one I want to add is XRP, and then that one is going to be pretty big, and then also maybe Tezos and Stellar. So
okay, all right. Any specific reason besides obviously Tezos with the big news from Coinbase that we'll get into in a second, but any reason why you're choosing to cover those?
Yeah, well, actually, Stellar and XRP as well are getting picked up in terms of price action. So you see volatility is picking up, things are moving, things are pumping, and that's because of the news that they've been having. So, I mean, that's like from the fundamental standpoint, but it's like from the actual price action. Once these guys traders are gonna start come back to these assets. And trade, they're going to want to know where, things are, where's the support, where's the resistance and so on. So they're going to need to know how they're going to position in the market. So that's why I'm trying to do that for those tokens. Because before, you have these tokens that are just continuously falling down and can't catch a bottom, right? So now we're finally starting to get some bottoms in place and things are starting to turn around.
Yeah.
And it's becoming more interesting.
So basically, you weren't able to trade those tokens at all because it was just a complete, like roller coaster down at least at that time. But anyways, we got a big episode here today. We got an investment disclaimer we need to get to first. So obviously, this is not investment, financial, or legal advice in any certain way, form, or fashion. Do not use us to make any trades. Certainly, we like bringing you the news. So if you want to have investment advice, head to Dimitri's desk. No. Sorry. Yeah. Obviously not. We're just kidding there. But you've been getting pretty good at those disclaimers. Anything I missed there?
No, that's about it. Yeah.
All right, sounds good. So Scott, what's up? I see you in the chat there, but I appreciate you stopping by, man. Thanks for the continued support. But let's get into today's episode. So we've got that first story that you've got here. We're gonna pass over the Tether news because it's pretty much nonsense at this point. It's just he said, she said. So we're gonna start with this Tunisian news. So what's coming out of Cointelegraph here?
Yeah. So basically, crypto Twitter blew up about this Tunisian news, which is the first sovereign country that is started to offer digital currency that is essentially backed by the government. It's e-dinar, electronic dinar. So yeah, basically they blew up. The internet blew up saying, "Hey, this is great. This is the first country that's actually already implementing this." And compared to like others that are exploring, and still like trying to figure out how to do it. But the thing is, it's like if you really look at the country itself, it's like a 40 billion GDP country. It's pretty small. It's got 11 million people in there, which is like that's pretty much like New York.
Yeah, absolutely.
So it's pretty small, but so the main thing, it's kind of far away from being a cryptocurrency, essentially, because the way we know it, because what it really is, it's just it just puts their dinar on a blockchain to prevent counterfeiting and those things, and make it more efficient in terms of transfer and so on. So in reality, it's still backed by their dinar, which is the real physical currency. And
so it's just digitizing their currency for the most part.
Yeah, exactly. And and the government still controls it. So it's like, well,
Yeah, absolutely. Well, so that's kind of like the worst case scenario for a lot of the crypto anarchists within the community, where you're kind of just literally digitizing their currency so that they can track not only those people who are counterfeiting the money. I don't know why I put that in quotations, because that does happen, but it does seem like that's their in to start kind of surveilling everyone else who's not counterfeiting money.
Yeah, absolutely. And we've talked about this on previous podcasts, right? So like, where you really have to take these news from like China and from wherever else with a grain of salt, because like reality, what they're what we're seeing is what they're trying to do is implement this technology for their own benefit of security surveillance, not really a benefit of decentralizing and getting rid of the central bank manipulation that we're all familiar with, and so on, where they keep their citizen hostage in the economic struggle that they have in those countries. So like those benefits are not seen, with the introduction of their electronic currency, so I don't know, it's
it seems like more it seems like more of a benefit to the government than it does the people on the ground. So I mean that's great to see, though. We'll see how that plays out. I mean, if it works successfully and there's not too much controversy with surveillance on their citizens, maybe it works, maybe it doesn't, but it's always nice to see things going forward.
Absolutely, yeah. And it's funny, it's a Russian company that actually did this introduction and is working on implementation or for central bank to make this happen, which is kind of like interesting. And also Ukraine made the news as well. Ukraine is also came up saying that they're gonna work on their digital currency as well.
Really?
Yeah, that was really interesting too. I was happy to see that, but that's very in the very early stages. They're like kind of still exploring. It's nothing that's happening like immediately.
Gotcha. Yeah, when it gets implemented in Russia, that'll be a whole nother can of worms that we'll be getting into. But let's get into some China news. We had two specific news that we wanted to cover in China. We've been talking to a bunch of people actually in Asia via the Layer 1 podcast. So we've always kind of been interested in that area, but specifically since China's come out and kind of backed blockchain in one word or another. But this one is Alibaba partners with Lolli. So if you guys don't know about Lolli, that's that kind of cashback rewards. And I say cashback, but it's really Bitcoin back. They partner with different, retail services, and you could technically like purchase a car and get some Bitcoin back, or you could purchase something as small as what's something small, $5 worth? Nothing's $5 anymore, but you could purchase a lot of things via the retail and get Bitcoin back. So Alibaba is actually implementing Lolli only for U.S. customers. So it's kind of interesting because Alibaba is mostly used in China, right? But there are a ton of Chinese users that live in America. So those are not going to be for Chinese citizens, but for maybe people who use Alibaba over here, and maybe Chinese citizens that live over here that use it as well. So that was interesting. It's kind of buried within the article, but it's primarily for this Singles Day. It's kind of like a promotion around this Singles Day. I don't know if you know anything about Singles Day. It seems like a cash grab, but it's a way for Chinese citizens to spend money on themselves. It's kind of like Valentine's Day in reverse. But in order to do that, in order to have that implementation, obviously they've been talking behind the scenes for a while. So it's good to see kind of across the pond. I believe Lolli's a U.S. based company, so it's good to see that across the Pacific there's some relations going on. What do you think?
Yeah, no, absolutely. I think the event is kind of similar to, like you said, the Valentine's Day, but just for yourself. But also, it seems like they're trying to push, like, with the sales and everything, like Black Friday that we have in the US, similar to that. Because if you look at the sales that they have during that day, it's like insane. I just looked up the stats from last year. People spent 2.3 billion in one day.
Jeez, my goodness.
Yeah. Well, I mean, it's for yourself, so
yeah, treat yourself.
Yeah, you're probably gonna spend more than you would spend on
Goodness
somebody.
gracious. Okay,
But,
all right.
so the interesting thing is that that's just overall sales in general. So your point is that if they're opening this up to US, not to China, then it would be interesting to see what is the actual percentage of that's going to be used in US, compared to in China. But overall, it's great because this event is huge, very popular. So that further advances.
Yeah. There's kind of a sinister play at this, and there's always going to be competition between U.S. and China. But I want to hear what you have to say about this. This actually is a bad thing for the U.S. because what it has is people who, let's say, I guess it's Lolli works in the sense that you're spending USD and you get Bitcoin back, right? You're not spending Bitcoin and then getting some Bitcoin back, correct? Have you looked into this?
No, but I haven't confirmed this, but pretty sure that's how it works.
So basically, the way I'm approaching this is that Alibaba is kind of going to take up that market share of people who are spending money on Lolli instead of a company like Amazon that's out of the U.S. What do you think?
Yeah, I mean, it's possible. Obviously, they're hot competitors. So definitely taking some USD from Americans, is a good thing for Alibaba.
Exactly.
Steer it up. Yeah, and then also you have to think about how susceptible is the U.S. market to just the cryptocurrency and Bitcoin hype and all that. So it's interesting if they can, if that's going to really steer up huge sale and interest in that, and how those people are going to react. That they're going to just take that BTC that they earned and dump it right away, hold it, right? So
the great Lolli dump of 2019.
Yeah.
Okay.
Black Friday where it dumps,
Love it. So let's move on to this next one really quick, guys. If you're out there, I see people filling in to the channel now. Scott, if you have any topics you want us to cover, or the people that just kind of filled in to the channel, if you guys have anything you want us to cover that maybe was just breaking or something like that, let us know, and we'll for sure try to cover it for you guys based off the dashboard that we have set up, because we really have a script, but if you guys throw something, we'd love to go off script. That's kind of when the best conversations happen. But let's touch on this last bit of China news. Tencent is, I guess, building a virtual bank. They got a regulation approval in Hong Kong to build a virtual bank. Now, there's no details on what that virtual bank will be, but it's good to see continued regulation, at least within Hong Kong, for crypto. And again, not many details. I think Tencent, it says right now, renamed Infinim to Fusion Bank in July after it received the license in May. So they've done a little bit of rebranding there. There's been a ton of these virtual bank licenses actually, given out. I think a total of 12 at this point. So they're moving forward. They're, again, it's kind of shrouded in that, what's happening over there in China news. But it's good to see.
Yeah, man, absolutely. You know, it's interesting. Like every time we hear something where it's like a virtual bank, e-wallet that bank is offering, and like all those things are like suddenly triggers all of us and says like, oh my God, this is it. This is the adoption. This is the, what's going on. I'll tell you a story. So I went to a bank, PNC. We have PNC Bank here in PA. And I've set up an account there and they gave me a card. And on the card, it says e-wallet on it. And I was like, wow. I was like, really? Can I send my like ETH there? And the guy, obviously was like, nah, you have basically 3 virtual accounts that they set up. And it's like basically, regular account, savings account, spending account, so on. So it's kind of like the virtual setup. So like this news, for example, with the virtual bank, could be just an electronic way to do business. Nothing has to do with crypto or blockchain, that's why like, the details are not there. And like some of these reporters are pretty quick in picking this up and dropping like, oh, this is it, crypto, like it might not be related to that at all. It's just setting up an electronic bank that's, is like a virtual bank instead of having a physical bank, which is, nothing has to do with blockchain. But hopefully that's not the case, but I'm just a skeptic.
Yeah, I mean, you have come from that experience. So, anyways, we've got a couple comments here. Scott was talking about the DApp network. So obviously, LiquidX kind of just got launched on Liquid Apps, and we've been talking about Liquid Apps for a little while and possibly having a team member on. But essentially, I guess LiquidX is this implementation of their interoperability between EOS and other chains like Ethereum. So we've been talking about blockchain interconnectivity a little bit for a while actually on Layer 1 and getting everyone's kind of thoughts on what the importance of that is. So if I had to kind of like generalize it here and ask you a question, it would be what is the importance of connecting an Ethereum dApp to the EOS network or the other way around?
Yeah, and that's something that you've talked about this before, where it's like, well, if I'm, if I have EOS and I'm playing dice, or, I'm playing some kind of a dApp, will I change it to a different token to play dice on their platform? Like, there's really no use there, right? But, if there's a I can't pronounce this word.
Yeah, inter-blockchain connectivity, yeah. IBC, apparently.
IBC, yeah. If that really provides, like, what is the value there? Like, why would you do this? What is the value proposition for this to be happening? I really don't see it clearly myself at the moment, but maybe I'm just not as tech like savvy to understand the benefit of it. But from the way it's the way it stands right now, many have been working on this and trying to implement this where it hasn't really done much.
Yeah.
In general,
I think there's more of an opportunity between the side chains on EOS connecting to the EOS platform and kind of the interconnectivity there instead of. But maybe we're honestly missing something. Well, maybe scaling Ethereum dApps, something like what not Liquid. Who trying to think of that project that's trying to have Ethereum dApps kind of at the scalability of the EOS. What's that?
CryptoKitties, guys?
Not CryptoKitties. No. You're talking about Dapper Labs. No, it was a project that we were looking to have a node on.
Oh, huh.
Loom Network. Loom Network was one that was kind of trying to solve scalability. So Scott says maybe wrapping BTC and moving it to EOS. So then you would have the scalability of EOS or the transaction and computation speed of EOS, but the back end would be. This is a very. Go ahead.
So essentially, you would say that this would help BTC become like a payment processing currency by utilizing the benefits of EOS while you have BTC. We've talked about how BTC can be really a payment processing tool because it's not quick enough, right?
Yeah.
So maybe in that sense.
Yeah, it also doesn't become I feel like it didn't take hold of that narrative of being a payment processing type of system because of its store of value in sense, like where you're kind of having a system where you're not going to spend $5 today that might be $15 tomorrow at the retail level.
Right.
I really feel like that's the retailers. I mean, unless you have a ton of Bitcoin, and obviously there's tons of lending services, so now you're just spending Bitcoin on that pace. It seems to me that more so retail investors are going to be using this as a store of value so that they don't get, less tomorrow if they spent more today. That pizza myth, and it's not a myth at this point, it's a real story, but the $10,000 Bitcoin pizza is a great example. Why are you spending Bitcoin at that clip to have it be worth, 10x tomorrow, 1,000x tomorrow?
It can work the other way too, by the way.
Yeah, we know, and we'll get. Yeah. We'll get into that in a second. That's a fair point, though, Scott. I mean, wrapping Bitcoin to allow it to move, at a faster clip, and then connecting it to EOS. The only question that you would then have is within those EOS transactions. Everyone's always been talking about, the security of the movements that are happening on EOS when you have a top 21 block producer. So certainly, like I'm a huge EOS bull. I really do believe EOS is one of the certainly, hopefully not AOL or Yahoo. Certainly, hopefully it's like a Google or one of the websites that's still around here today, at least in the blockchain sense. But that is an interesting conversation. Maybe we can have that with someone from the Liquid Apps Network here shortly.
Yeah, for sure. I'm definitely down. We've been talking about getting them on for quite a bit. I think it's time.
I think it's time to make it happen. Get Pete on there.
Yep. That would be a great guess.
Cool. So let's move on. We've got a big. I think we're moving into Tezos, correct? I know we touched on that for a second at the beginning of the episode, but we've got a story. We got the full story here from Coinbase.
Yeah, absolutely. So big thing that happened in Tezos is basically Coinbase released staking and rewards for Tezos, and hence the result that we get the pump in Tezos price, which makes me feel like the Coinbase pump is still around, back in the day. So the Tezos went up 50% when the announcement happened. So basically, staking for Tezos on Coinbase.
Did it eventually retrace a little bit, or did it kind of hold like 25%, anything like that?
You actually asked a good question. I haven't looked at it today, but it did retrace a bit. Yeah,
and it looks like right now Tezos is going for 5% APR. Everybody's trying to be a bank now. Coinbase is going to be, obviously around for a while. The lending services is interesting as it's come about on these different chains. I saw that Dice.1. I don't know if I told you about this, but Dice.1 released its banking feature, and at one point they had about 25% APR on EOS, but it was off chain. So it's a situation where now you start to lose the trustlessness of maybe staking and receiving rewards for like staking to a block producer or something like that, where the return is less but the trust is a little bit different. So, but what
also was off chain that gave a lot of returns?
What's
daily.
That? What was it?
Daily returns that people were off chain.
What's that? Thanks. Appreciate that.
I'm not saying it's the same, but it's just like that's kind of like this industry has been impacted by a certain sequence of events, where now that we see something where people are getting returns and it's off chain, and they're asking, well, where is that coming from? We need proof and so on, because back in the day when BitConnect was around, well, it's like, well, we have the algorithm that, you know, trades it and makes a lot of money, but yeah, you know, everybody kind of just trusted that, and that blew up. So I think that's why a lot of people are like, you know, cautious now when it comes to, you know, stuff.
I would say that's true. I think that obviously the casino dApps have a little bit of a leeway there because they can go ahead and say, hey, you know, you're just taking part of the house profit, and that's why the APRs can be so high. But those are very, you know, volatile, as well as the cryptocurrency that is involved. So you're kind of like tight roping on that volcano that I talk to about all the time.
Yeah. Yeah, absolutely.
But anything else from this Tezos? Did it retrace?
Yeah, I mean, it retraced, but you know, it really didn't retrace that much. We're still sitting from that pump. Originally, we're still sitting 50% up. So we actually moved up as high as actually close to 100%. So it was huge.
Interesting. I would foresee Ethereum being used here as for lending and staking as well. What do you think?
Yeah, no, absolutely. The question is when. You know, yeah. So.
Dope. All right, so we've got Bitcoin. We got a couple Bitcoin news. We want to touch on. Let's touch on the price first, because you already touched on this on Dimitri's desk. I know you have Dimitri's desk tomorrow, so you don't have to, you know, hit him with everything right now. But we did have that pump to, what was it, 9,200, and then it kind of fell below that 9K mark. So what do you see as far as price action? Again, if you guys want the full analysis, we've got about a 30-minute TA video, as well as, you know, TA instruction that happens on Tuesdays. Those are Dimitri's Desk Live. Those are 3 or 4 p.m. Eastern.
4 p.m. Eastern.
Okay,
yeah.
4 p.m. Eastern. But go ahead.
Yeah, and I do them live, so you guys can ask questions as well in terms of like, you know, maybe other coins that you're looking at, or certain formations or time frames that you use, or questions just general in trading. Try to provide as much value as possible from my experience of trading. So yeah, given the BTC USD price right now, we're kind of bouncing. We're stuck between the 50-day and 200-day moving average on a daily. So the price is kind of bouncing between those two levels. Let me give you the exact amounts here. Yeah, it's between the 9,200 and basically 8,500 is where the price has been kind of bouncing around and trying to decide on the next directional move for it. So we're still waiting, you know, like I mentioned before, having the 50 below the 200 is really not ideal at all, right? So right now the price is kind of stuck in between the two. So we have to get the 50 above 200, but the thing is, you know, those are lagging indicators, so they can lag behind the price. If the price is above the 2, then, you know, eventually the 50 will cross the 200, and by that time you'll miss a lot of the trend. So I think that's why traders are trying to position themselves right now as they see this breakout, you know, to catch a support around 8,500. But below that, you know, we'll be looking at like, you know, lower 8,000, 7,500. The grim scenario. But as far as the price, we've been moving sideways, man, really, like since that big pump that happened of 40%.
One of my favorite quotes from you when you're talking about like the difference between retail and institutional investors, or more experienced investors, is that I think retail investors kind of look at volatility and it's a bad word, but you always say there's opportunity within volatility. That's that's where the most opportunity exists.
Yeah, and it also depends on your trading style. So for me, I'm more of a trend trader, and so like, when the price is moving sideways, a lot of range traders come through, and they love that environment, and they'll be picking like the top and the bottom of the range, and they'll just milking that until it actually breaks out. But you know, it works until it doesn't, basically, because, you know, once it breaks out, then you're stopped out, and you have to have enough good trades within that range to really offset the loss that you're going to get after the breakout. But yeah, volatility is great because it brings traders, it builds up hype, right? So, you know, if Bitcoin is on the move, you know, people are talking about it, traders are hopping in long or short, and they're making those big trend plays. And also another thing that separates, you know, institutional traders from you know, retail traders, is that retail traders are very emotional when they trade. So they see something pumping, for example, 40% pump, right? retail traders hop in and buying, right? They're like, that's it, moon, we're going, right?
Yeah.
Head, they know, they in their head, they think that this is the last opportunity they have. If I'm gonna
FOMO.
miss this, yeah, exactly. And like from an institutional level, like you look at it and you're gonna react based on closes of candles, based on indicators. You're very disciplined. You're like, listen, I'm not buying here. And people that made that decision when we had that 40% pump are great because we actually, from that we already retraced, more than 18%. So it's like, if you bought BTC at 10.5K on that pump, you are in trouble, So that's a big, one of the other things that separates it.
So it's definitely not for the faint of heart, but definitely take a look at those Dimitri's Desk videos. They definitely help me a lot. Obviously, I'm not as much of a short-term trader as you are, but it definitely helps to have kind of a short-term view within that long-term kind of or I wouldn't call it a prediction, but long-term investment. But let's talk about Bakkt really quick, because Bakkt is coming out here and saying that they've got the green light from, I believe it's. Who did they get the green light from? The financial services Department of Financial Services within New York. So they've got the green light to go ahead and roll out Bitcoin custody, which is something they've been talking about for a long time. I know the futures is kind of reaching all-time highs on volume every time, every other day here that we hear. But what do you think about this Bitcoin custody, and why is it crucial to? Is it crucial to retail adoption? Is that something that's kind of like a trickle down effect? I know it doesn't have anything directly to do with the retail investor, but having big institutions be more comfortable with holding Bitcoin or having Bakkt, obviously, custody their Bitcoin, does that have any effect on a retail investor?
Yeah, good question. I mean, it's really geared towards institutional right now, but the trickle down effect is that is the way we believe is that once institutional investors are in the game, then you're gonna have a more sophisticated price discovery for Bitcoin, right? I've covered or for Bitcoin futures, so it's really kind of providing that infrastructure or infrastructure for institutional investors to get in and according to the regulations be able to trade BTC futures. Because listen, the way things work in the hedge fund industry is that when you're trading, when you're a portfolio manager, when you're investing, you must have a custody. If you don't have that, then that basically that product doesn't work for you. It's a huge regulation security issue. And the fact that New York, which is one of the toughest regulators and pretty much the ones that dictate how the financial regulation oversight is in the U.S., has given the blessing to really do this custody feature for the institutional traders that are coming in. And also, that's another thing that's important to mention, is that a lot of people mentioned how Bakkt was not doing crazy volumes when they when it launched. And I explain that, from the institutional side, nobody's going to hop on this brand new product with millions of dollars and trade billions of dollars in volume on the first day, because really there's, it needs to be tested out in a live environment more. So once we get some volume and rapid, it'll increase gradually. And now that we have the custody feature, I think it's going to start picking up more and more now for the institutional side. I think they were talking about like tackling like 60 billion in funds. Yeah. So it's like, it's huge. It gives you the ability to, for the institutions to really do this right. Yeah.
You know what this reminded me of, this Bakkt situation, and you did call the futures, and how in the beginning it wasn't gonna be a lot of volume. I remember right before it started, right before they started launching Bitcoin futures at Bakkt, you had said that don't be surprised if the volumes aren't high at first. So that's a good call. But you know what this reminds me of with the Bakkt that we're talking about with the custody is, hold on, coming in here.
Are you thinking of a company?
What's that?
Are you thinking of a company or what?
No, I kind of lost it. Never mind. I'm over here trying to do 15 different things. But anyways, that might come back to me while I'm talking about this next spot. We've got Ethereum and EOS a little bit. But so Immutable Games obviously launched Gods Unchained. So Gods Unchained is that trading card game on Ethereum. They a lot of their transactions are off chain, but the actual asset is an NFT. So the card acts as an NFT, which is actually a genius way to raise money. So they obviously had a Series A. Oh, it just hit me. Got it. So what we were talking about with back custody and how you said a lot of institutions won't get in, it reminds me of venture capital. Nobody wants to take lead, right? Nobody wants to take that lead investment, but they'll always be good to hit that last mile. So that reminds me a lot of that. But anyways, moving on. Gods Unchained. We've got raised $15 million in pre-sale. Now they already had their Series A where they raised $15 million in a private investment round, but they use these NFTs to raise money almost in the same way that CryptoKitties did. So CryptoKitties would have a succession of cats that would come out, these NFT collectibles trading that would trade on the open market, so you could buy one, possibly go up in price. Most likely not going to go up in price, as you can see my cat's sitting in my the wallet. But they did raise $15 million through these trading cards, through these Genesis packs. And I thought it was actually an ingenious way to raise money, because you're not giving up any equity.
Mm-hmm.
You're literally just creating these cards. You're raising 15 million, but you're not giving away 30% in tokens to the public in some type of public sale. You're literally just creating NFTs. You still maintain that equity in your company, and you raise the 15 mil. So that was super interesting. Congratulations to the Gods Unchained team there.
Yeah, it's crazy, how like just throughout the history we see how the card games and like the value of certain cards like fluctuates just in just regular non-crypto, cards that you had. Like I played Magic cards, back in the day, Magic Together. And like somebody like this one kid that has like this just really cool card, and it's like it just dominates, everybody. But like, those cards like obviously have a value, and everybody would try to compete and trade them and so on, right? They're applying just the old traditional, strategy to do this in crypto. And it's like, it's great. It's amazing, right? Like you described, just why change it if it works, especially for a game like that. And you've streamed that game, right? A couple times.
Yeah, we streamed it through Twitch. I know I specifically Cheese Wizards, which is a game from the Dapper Labs, the guys behind CryptoKitties. I know a lot of you aren't gamers, so I don't want to scare you off talking games. But Cheese Wizards did partner with DLive, I believe, which is the kind of decentralized version. I believe they have the Lino token on DLive, so they kind of partnered there to have streamers, even non-crypto streamers, kind of come in and stream Cheese Wizards, which is kind of that battle. It's not necessarily a trading card. You have like an NFT Cheese Wizard that you buy from them, kind of like a CryptoKitty, and they battle in succession of like 4 or 5 moves, kind of like rock, paper, scissors. So water beats fire, fire beats grass, grass beats water, things like that. And you actually gain power from, and power is denoted in Ethereum, or Ether. So you could actually take Ether from another guy's character and sell that character for more. But interestingly enough, Gods Unchained is being streamed on Twitch. I don't know if they have any partnerships there. I don't know how crypto-friendly Twitch is, but DLive is essentially a great place to go to watch these crypto game streamers. But yeah, man, it's interesting to see all of these crypto games come to the serviceable level. I know you and Mike asked me about Gods Unchained, and I was like, yeah, it's good, it's serviceable, but it's nowhere near these non-blockchain games competitively. We do have one question. AEDJI_TV. If one company like Apple is worth $1 trillion alone, how much will the whole crypto market be worth in a few years? So again, not investment advice here, but we're going to take a stab at it. So I'm looking here. The total market cap for all of crypto at this moment alone, I believe, is $239 billion. So based on his comment there, what do you think, Dima? Take a stab.
Yeah, I mean, it's going to be hard to predict this because it's kind of like apples and oranges because, like, apples and oranges. Anyway, so
Apple and crypto oranges.
yeah. Because Apple is like dominating in many different sectors, right? So until that time when like we have crypto like Bitcoin like dominating those sectors, then we can start actually predicting what is going to be the end goal of like the total market cap of all crypto.
Mm.
Uh, but I think just in general, if you think about it, Apple has been one company in the US, and they obviously hold a certain market share across the world. So if you have crypto that is easily accessible in countries where, let's say, Apple services are not or Apple products are not, then that will benefit the market cap to be higher than actual Apple or whatever. So really, it's all about the accessibility and market share. And I think if you compare the Apple to like crypto, I think crypto in general has higher accessibility when it comes to countries that are heavily restricted or undeveloped and so on, where Apple might not see those countries as an opportunity, right? Because they cannot afford their services or whatnot. So it's hard, it's hard to really compare those two things because they're quite different, and I love speculating. So thank you for that question. I would say, I'll say 50 trillion.
There you go. Gave him the actual number, the hard number. But yeah, that is a tough question, man. You talk about Apple, and I don't have any numbers in front of me actually, but the amount of people that actually use Apple products on a day-to-day basis, it has to be more than half the population of the world. Like, or at least something like that. So it's gonna be tough. It's got to come from Bitcoin. If we're being serious, there hasn't been a use case other than maybe DeFi on Ethereum that's really shown, and that's still again money. So you're talking about finance, and the market share has to come from that. I think. I have a tough time thinking that one of these like third-party applications, like a decentralized Twitter, is going to be what takes us to or close to that $1 trillion market cap. It's gotta come from Bitcoin primarily, but also other DeFi platforms. Certainly, there's more numbers there. You could certainly build 1,000 decentralized applications, and hopefully some of them are worth millions of dollars or hundreds of millions of dollars at their peaks. So we'll see, man. We'll see. That's an interesting question, but we appreciate it. Keep them coming, man. Again, I feel like those are the best conversations we have here. So we've got the EOS blockchain congestion. And congestion is probably the wrong word to use. It's because that implies that there's a kind of that implies that the resources that an individual needed, I guess, stayed the same. So what we've had here is the EIDOS airdrop. EIDOS is a project, or more specifically a token, that can be mined by using CPU on the EOS network. So essentially what you've had is in the same way that in late 2018 you kind of had these gambling dApps. And I think at one point, gambling dApps took the EOS transaction level up to, I wouldn't say anywhere near capacity, but you certainly saw some congestion based on the mining that was happening. Where people would make bots, all this stuff, and people started to have questions for Dan and, hey, what's going on here? It's costing me a lot more to actually process transactions. So essentially what we're seeing is that happening again with this one smart contract that, I guess, in the way that it works is you send a transaction to the smart contract and you receive the EIDOS token in return. So that's clogging up the network. I think at one point it was like 95% of the entire network was taken at this point. So people are complaining, and it's kind of, once you understand what's going on, it's not too hard to see the situation. But I know people kind of look at this and they're like, well, there's this scalable platform, and what's happening? People aren't able to even send one transaction if they have 100 to 200 EOS staked. So the best way I can explain this is that so let's say you, Dima, let's say you had 100 EOS staked. The way that this works, the way that this network works is it kind of expands and contracts. And what I mean by that is when there's not a lot of people using the network, your 100 EOS can go further.
Mm-hmm.
meaning you can use more of it. It's meant to be super efficient. So your 100 EOS can do more when not a lot of people are using the network. And then when a ton of people are using the network, that 100 EOS is not going to go as far. So people were comfortable spending the amount of, EOS that they were spending, on CPU. Everything was hunky-dory. And then this EIDOS contract came up, bloated kind of the network in a sense. But that's what's happening right now. That's kind of the situation. I know a lot of people are expecting Dan to have an answer. It's an interesting question. Again, we're talking EOS, so we got to talk governance and all this stuff. People are asking the block producers to do something. It's kind of a carbon copy, to be honest, of that November timeframe last year when all these gambling dApps started to come out.
It was that issue with the RAM, right? I remember when back in the day, the resources, basically they bought up the resources for speculation rather than use, which essentially stopped the network, from expanding because people could not use RAM because it was so high priced. And then they start patching that up. And now we have that 2.0 basically happening. And now we're going to go back to governance, get back to Dan. And it's like kind of like back and forth,
Who's in control? Who's in control here?
All of this.
For those of you that don't know, we were on a call. I don't think I can say too much, but we were on a call with the IOST team, and one of the colleagues who's in the IGA, we were just like in the middle of the call, and he was like, I just want to know one thing. Who's the guy in charge?
Yeah. So it's like, I don't know. It's like EOS has been going through all these waves, basically. Of issues continuously happening, and to your point where the gambling dApps were benchmarking the network, like I mentioned before, this is why like the benefit of these gambling dApps is because they actually benchmark the the capacity of it, or how much can it really handle.
Mm-hmm.
We can write, it handles 1,000 TPS, but like really, let's see it. So those gambling dApps do provide the value, and then something like this happens, there's certain inefficiencies that are pointed out by what you've described, so constantly, the network needs to continue to evolve. The problem is that based on how it's structured with the governance and so on, that changes really don't happen as quick as we want, right? So like it takes time, man, like to do this stuff.
It does. And what Scott's talking about here, he said we just need to get rightful of that 20% floor on the Rex. So these are situations that could be handled very easily. I think some of the people were upset that there was kind of that arbitrary floor set by Dan. It was that 20% was just arbitrarily, picked by Dan, and certainly like there's going to be different answers to these problems. I think one of the main answers is going to be just like these gambling dApps where they became less profitable as you went on. Get rid. I see you. Again, that 20% floor was on the Rex, and Scott's talking about that was put into place by Dan Larimer arbitrarily. But I think the answer is going to be just like in November. It's going to be less and less profitable to mine this EIDOS token. So that congestion will go away over time. But certainly, like, there's going to be a question to get like, what if it happens again? What if there's 10 EIDOS? But I certainly believe in the thought process behind not calling it congestion, because it's really not congestion. It's kind of giving more of a true transaction or true CPU usage, because that's kind of what your that's how much CPU you would have to have staked if, say, a voice comes online. If a voice comes online and 1 million people are using voice, your transactions are gonna, the total CPU that you are taking up, you're going to need to pay a little bit more to use the network. The problem behind that is, people aren't going to, normal people are not going to stake CPU to use a dApp. I think I think getting them to use a integration wallet like Scatter and then using the dApp is already, the limit. So what you see is a lot of, platforms. I think Big Game did it. I think Everpedia did it. There were a couple other EOS platforms that, staked CPU for their users, so that the user didn't have to deal with that. But that requires resources. So you see a ton. I think Scatter just moved to Tezos today. I think, and certainly they'll still support EOS, but I know Scatter is looking to get funding. Remy was reaching out to IOST, some of the people on IOST via his Twitter. It was kind of a public tweet. He was like, I need to find some people on within IOST. So certainly interoperability is the answer for crypto companies, as we talked about it.
Yeah, it's gonna be interesting to see how that it's going to continue to happen. With that, that's a great point of voice, man. Like, really, once you're going to have something that's huge, that's going to start generating those transactions and juicing that network CPU, then what is going to be the cost of that to get in for other,
dApps.
Companies to dApps, and like really the cost is going to be higher. So, it's going to be tough, man. It's like, well, voice might be the only thing that's on the network.
I love the who were we talking to? I think it was Ben. They kind of modeled their token after real estate, and it kind of reminds me of this. Like when you're staking EOS for CPU, you're paying for real estate on the EOS network if you kind of looked at it as land. So certainly when some big dog comes in and makes your land much more valuable, obviously you're not seeing the return there, but it's harder for somebody to, come in and get to that territory. Think of San Francisco 30 years ago as opposed to now. It'd be almost impossible for a random, middle-class person to move into San Francisco as opposed to 30 years ago. So
yeah, you have like, Berkshire Hathaway, put up a sign, and then, 10 years later, that neighborhood is just like, 10x.
Exactly.
So yeah.
But as always, man, it's nice to see EOS out in the open doing this stuff. It really is. The cryptocurrency community would be less for itself if not for EOS. So. So we've got Stellar, we've got IOST. These are the last two we're going to cover. Guys, if you have questions, you guys that are in the channel, if you've got questions, please send them out. If you're watching this post live, definitely leave comments in the comment section. We'll get to it on the next episode. One announcement we want to make before we continue on. We are going to do a Tron giveaway. So we're going to have, I believe, I don't know if it's $25 or $50. We'll figure it out. But we're doing a Tron giveaway on the beginning of the next interview that we're going to have on Wednesday. So that episode will most likely be out on Thursday. So that Tron giveaway, or at least the details behind it, will be given out then. So keep a lookout for that.
Nice.
Perfect.
How do I win?
As always, Dima, you cannot win any of these unless you're on your burner account. So you can figure that out.
Yeah, those are getting expensive, man.
All right, what do we got? We got Stellar, we got IOST.
Stellar. Yeah, so Stellar basically blew up crypto Twitter as well, where they burned 55 billion tokens worth or 4.7 billion in USD, and guess what? The price pumped, right? So everybody was quick, to go on Twitter and say, hey, Stellar burned 50% of their token supply. This is it. We pumped 20% on the price, but if you do the math, then it should be like more than that. It should be like 50-60%, and because based on the supply and demand. And so, but the problem is that if you really look into this, you have to look at the circulating supply as well as the regular supply. So they burn actually just the regular supply, and it's actually something that they had stashed for inflation back in the day when they were working, and when they had this in their platform that would provide inflation for Stellar, and they basically pretty much got rid of that. And if you do the math, so I've talked about this on I think last episode of Dimitri's Desk, where if you calculate the circulating supply, you have the actual supply, and how much they've taken out, then that really kind of accounts for about 25% price bump. The kind of the thing behind this is that what you have to understand, they were thinking of a strategy to obviously have their token price come up, right? Because as they're trying to create all these things with developers, and they had all these giveaways, and people, some people will probably cash in out, which puts a downward pressure on Stellar. By doing this token burn, they really give that stimulus package, for Stellar, and props up the price. So we'll see how long that's going to actually hold. But really, that was a huge, huge thing that they did. I'm a fan of Stellar overall. I don't want to, seem like I sound bearish when I talk about this, but it's important to understand the details there.
It's interesting that you say that you're a fan of Stellar, and to a I guess a more extent, you're probably a fan of XRP if you're a fan of Stellar.
No.
Okay. All right, but I do have a question. So this happened on EOS too, because they had that reserve or that inflationary pool of what they wanted to do with it, and I believe they ended up burning a certain amount of tokens. I think I don't know if IOST did the same thing, but I'm asking this to you. I'm asking to the people in the comments if there was kind of a reserve pool of tokens, and you had to figure out what you wanted to do with them. Is burning it the way to go? I feel like you could use that. I think at the time there were a lot of EOS dApps that were like, hey, you could fund dApp development. The dApps are always looking for.
It's only $4 billion.
Yeah,
come on, man.
They're always looking for cash, obviously, and to get bootstrapped. But what would you do if you had? What did it end up being? How much was it?
$4 billion.
Yeah, $4 billion. What would you do with these?
Yeah. So really good question. So they've sat down and analyzed, like, okay, what is the best strategy for the token price and overall, like, to help the network. So if you take the approach of, let's say, using that 4 billion and let's say doing further airdrops, giving it out, or funding development of dApps on the network, then that's going to continue to cause the downward pressure for the actual price, because they actually have to, convert that into whatever fiat or whatnot they need to do, in order to start working on this stuff. So if they really did that, you've seen, Stellar is huge on these airdrops, right? So you've seen kind of the effects that it had on the price. So I think that's a huge risk when you do that. Especially such a huge amount, you'll see a 50% drop in Stellar, instead of a pump. So I think by taking out of the circulation or out of the supply, it's a way for them to prop up the price and help those dApps developers and whatnot that hold Stellar to make money on a way up. As the price appreciates, they are funding themselves with the price appreciation of Stellar, if that makes sense. So I think it's just a strategic way for them to do this rather than doing these airdrops and funding. One thing that's actually really quick I wanted to mention that also, maybe they didn't think of this, but if they did do some kind of funding in Stellar using that reserve, maybe if they put in a clause where they can't sell the Stellar and they can use Stellar as a collateral to get a loan from one of the lending companies to be able to use those funds to build an infrastructure. Maybe in that way, that could work.
So you're saying that Stellar would put into place a process where they would essentially fund the project. So I'm a project building on Stellar. They give me $10 million worth of Stellar tokens. Then I lend it via one of these lending services, and I get a percentage back in, say, cash, and that way it doesn't depreciate the Stellar price?
No. Well, so not in that sense. I mean, you could do that too, but that's not going to be as beneficial. I think what I was describing is that you use that 10 million to get a loan, and then use the 10 million as the collateral. So this way you have XLM.
Got it.
Yeah. You have the Stellar stuck in this collateral basically, while you have cash loan that you're using for development of whatever it is. That would help, but
No,
hopefully they'll listen to this podcast.
Yeah. Everybody's listening to this podcast. What are you
Yeah.
talking about? Shout out to everybody watching this right now. We appreciate you guys' support. That's kind of a bigger conversation too when it comes along with staking, because and you're talking about price depreciation as it comes to inflation and the distribution of the tokens, right? Like for a long time, IOST was pushing this. Hey, we're the number one staking platform. We're the number one staking platform. But there's a lot of downward sell pressure when you have a strong APR, right? Like, okay,
Right.
you got 15% APR on your IOST tokens, but there's a lot of downward sell pressure there. So maybe you end up almost at a, and I'm not saying this to make any type of predictions about what's to come in the future, but you have to have production, you have to have a lot of growth that happens on that network in order, and you have to have a non-crypto. It could not be related to your project at all. It could be Bitcoin dumping to 5K and your token following suit. There's a lot of things that have to go right to make sure that the user isn't also, or the investor isn't also losing money, even though he's getting that 20% APR.
Absolutely. Yeah, I agree. And it has to do a lot with the sentiment that, people have also in the community. We see that with the IOSD stuff with the lockup periods, right? The way they do quarterly distribution of rewards now that are supposed to, help out with the, to kind of spread it around so it's not just all at once. They also had the buyback program, right? That they announced before, right? That happened, so that helped. So it's hard. It's like chicken or an egg thing, which one? Like, you have to have a balance of both, and it's really, you have to find that equilibrium.
Yeah.
Sorry, excuse my ESL.
No, great job.
I've been practicing my vocals, but yeah. So you gotta really find that spot that's like perfect. But obviously, it's gonna swing. It's going to swing up and down when it comes to that equilibrium, finding the right way to do it. Either you burn, or also offering crazy like rewards, APR, without dumping the price, and also having a lockup period that doesn't piss everybody off. Like, it's like, I just want to have everything. Like, people don't really think about those things, but really you have to be realistic when you're seeing this, the way it's designed, and the way they're carrying it out. It's a work of an art.
Yeah, absolutely. And I think I token economics, and we had a great conversation with Ben Waters from Nervos. He went into token economics as much as anyone that we've had on the podcast, and we had him on the last interview. So if you guys want to check out token economics and kind of a deep dive, honestly, into not only Nervos but also Bitcoin and Ethereum, and how he sees those, and kind of how I don't think those are finished products in the sense that they're not spotless. I think each one kind of has its own. When I'm talking about Bitcoin and Ethereum, they have their own kind of token economics and incentives towards miners or staking when it comes to proof of stake. It's definitely an interesting thing that I don't think anyone has been able to figure out 100%, or else they'd be billionaires, right?
Yeah, absolutely. They would have raised $4 billion.
Exactly. So speaking of IOST, I know we spoke a little bit about their staking mechanism and a little bit about how they're doing. We had a meeting with Jimmy Zhong. So we had an interview with Jimmy Zhong, co-founder of the IOST Foundation. Now, Jimmy, we've been talking about him for a while now. We've when IOST was first coming up, we had Jeremy on the front lines, a lot like what you see with Vitalik, a lot like what you see with other founders of different protocols. You have Charlie Lee, you've got who you can name all of them, right? You can name Hoskinson with Cardano, and that was essentially Jimmy Zhong. And then over the past, I would say 6 months to 7 months, I think we've seen Jimmy kind of take an approach of sitting back and maybe trying to let others take the reins there. So we did see Terrence on a Chinese television network kind of taking the reins and explaining IOST and getting good playtime there. So that was good to see. Terry kind of finally taking that step up forward into the limelight where it's kind of been empty. As Jimmy stepped back, no one really took that stage. So it was good to see Terrence there, but we also see Jimmy now. So can you take us through the interview really quick?
Yeah, so this interview was in text form from btcmanager.com. Basically, like you mentioned, a lot of people have been asking, where's Jimmy? What's going on? Give us the insight of what is his like day-to-day like, and all those things. And we've brought this up also in IGA as well. People were asking to give more insight of what's going on with him. And here it is. So the voices were heard. And we get an interview with Jimmy where they basically ask them basic questions of, what is the vision for IOST Foundation? What are they looking to resolve, or solve in our industry? And it's kind of pretty standard there. But, one question is like, what does your day look like for you? And, he basically describes that he focuses on investment portfolio, incubated projects, corporate partners, enterprise clients, and institutional investors, where, he basically spends a lot of time on the phone, and does a lot of oversight on what's going on with IOST in general from a big picture standpoint. But like you mentioned, now that he's kind of stepped back a little bit and looks at the very, very big picture, where before he was very, very involved in terms of structuring and making those decisions. Now that we have a team that's that he trusts, that's handling some of those responsibilities that he used to, and now he can focus on a very big picture with institutional level portfolio investments and incubated projects.
It definitely goes without saying that I think IOST would be the best it could be if Jimmy was still in the front lines, right? Like, it's great to see Terrence coming online there, but the reasons behind maybe kind of going into the background a little bit, IOST didn't even have a token sale. Like, they didn't raise any funds, so the reasoning behind maybe somebody going dark or not being as involved, the number one reason would be regulation, right? Like, and it doesn't seem like regulation should be that big of an issue with, when you didn't have a token sale. Kind of like how what EOS is doing. So EOS raised all this money, and now like they raised, I think, something like $4 billion, and they used almost half of that on legal. So when you don't have that token sale, it seems to me like that. I wonder what the reason is behind, that kind of letting other people take the reins so quickly.
Yeah, it's interesting, to kind of discuss that topic. But at the same time, I want to say that Jimmy's hiding.
No, he's not. Like, yeah.
So I think he's not hiding at all. And when we said it would be great to have him kind of come out and do an interview, it would be great. And they had that. Also, we explored the idea of actually going over there and meeting them in person.
You did do that.
So that might be coming up.
When Ukrainian and China.
So we're trying to sync the schedules with theirs. Basically, we got to find out some dates when they're going to be available, and I'll make my way down to Beijing and knock on their door and see what's up, and find Jimmy sitting in a bunker. Just kidding. But
no bunker in Beijing. That's in Hong Kong.
Yeah. Sorry. So if everything goes well, then that's what's coming up. Another thing that was interesting for the interview is also the last question that they asked was, what will be an exciting development coming up for IOST to share with our readers? Basically, an outlook for 2020. The way he describes this is basically that, earlier this year, they've worked with Aerospace Project, that's global drone company and Civil Aviation Administration of China, and they work to basically manage their data analytics. And what he's trying to say is that they're looking to get more of these government contracts in China as the regulations are starting to pick up in terms of ease, and promoting these technologies within China infrastructure. We've talked about anywhere from finance to transportation infrastructure and so on. Obviously can be done in the military too. So he's saying that IOST is going to target these government projects for 2020 in Beijing, Singapore, Korea, Japan. We already know in Japan they're really good with regulators there, and that could be huge for the government to use the technology in their own infrastructure or projects that will benefit the government overall, make it more efficient, and we'll see what's going to come out of it. The only concern basically there is that all these things are great, but is that going to be actually involved? Is that going to involve IOST blockchain? Is that going to involve IOST token? Is that going to involve is that just going to be a private ledger that they're going to set up for them, private network they're going to set up using IOST infrastructure, but none of the nodes?
Does that give value to the IOST network?
That's what I'm saying.
Yeah.
So if you're setting up an infrastructure privately that it has nothing to do with IOST blockchain or IOST token, then that doesn't impact the price at all.
I see.
It's really, it's kind of just, hey, let's take this open source platform, have these guys that developed it as well help us implement this on a private level where it's going to help me manage like data analytics, for my airspace stuff.
Certainly there is a debate in the community whether these like government entities are going to be using their own blockchains or going to be implementing the protocols that exist now.
Right.
So that's a great question to ask going forward. I think Jimmy did a good job of answering the questions that kind of we've been harping on for a little while now. So it was good to see, from him. But that's pretty much it. We kind of went through 1, 2, 3, 4, 5, 6, maybe 6 protocols today. So, and breaking news. So it was definitely a packed episode, man. So if you guys want to hear about any other protocols, you want to hear about price action, I think you can check that over on Dimitri's desk. But if you guys want to hear, any more protocols or us talk about any other breaking news, please leave us some comments in the comments section. We appreciate your guys' support. Please like, subscribe, and then comment in the videos afterwards if you can. It really does help our channel. It helps the videos. It helps us get more involved. But keep a lookout for that Tron giveaway too in the episode that will be released on Thursday. But you got anything else, Dima?
No, I mean, everything you said is great. And, obviously we really want to know what you guys feel about the topics we talked about, right? So we love to speculate, right? We've dropped a lot of speculative stuff on you, and we want to hear what you guys think about that. What is your speculation? What is your thoughts about those things? Drop that in the comments. It would be interesting to get a good discussion. We'll bring it up, maybe in the next podcast to talk about it.
Absolutely.
All these hot topics.
Yeah, exactly. And we'll have Mike ready to roll, I believe, for that interview. He'll be here for the interview that will be released on Thursday. But definitely next Layer1Live, we're going to have the full crew together. I know we just had us two this time. That's always a good time, having the duo conversation. I feel like I kind of break down the lamp and have it kind of shining on you, asking you a bunch of questions, but you did a great
job. Interrogation, yeah. That's why I got my glasses on.
That's not. I thought it was to block out all the haters. But Scott, thanks for stopping by, man. We appreciate everything you're doing for the channel. Thanks for the support, guys, and we'll see you guys next time.
Yeah, I'll see you guys tomorrow.
Boom.